a big old good afternoon, good evening, good morning to traders all around the world here. This is Marty from the Energy Pits for Crude Squawk here. Looking at crude here today, kind of trading just a touch lower here, both in overnight session and in pit session. Our high-low close here today was 87.09 on the high end, 85.68 on the low end, and 86.26 we did close and settle the day. Again, in crude was moving lower today as the ECB revised their original GDP forecast. Again, their original forecast was 0.5%, and now they're showing actually a negative forecast of 0.3%. So again, making crude just go down just a bit here to the downside. Again, oil volatility still holding that off or below 30. Again, kind of struggling to stay above 30 today. We did see us open above 30 and then kind of fade that down to about 28.95. And then kind of coming back just a bit in the afternoon, but again, holding below the 30 and kind of just making us really trade in this range. Really no big significant breakout. And really until we get any direction from Washington for the fiscal cliff, we really won't see any type of really big dramatic move in the crude. Again, in the pit today, we saw the 84.5 to 81.5 put spread kind of created somewhat of a synthetic bid here, holding that 85.5 level. So that was a little bit of what we saw in the pit. Again, someone rolled the Jan 90 calls down to the Feb 85.5, doing the 1x2 about 1,000 times for flat. We also did see dealers trade the Jan 81 to 85 risk reversal, buying the puts, looking for downside activity, paying up for about $11 or so for those. Again, in natural gas today, we saw a decent trading range, a very large trading range, talking 37.48 on the high end and 36.14 on the low end, as you can see on the chart on the left here. We did close and settle the day at 36.59. Again, inventory data, they'd come out with a draw of 73 BCF, that's billion cubic feet. Analysts were expecting a draw from anywhere from 64 BCF to 70 BCF. So again, seeing inventories come out with a little bit greater draw than was expected. Again, making the price rally off the actual news number, going up to that 37.48, which is kind of 37.50 again, just right below that $3.75 even area. Again, just some historical perspective on that. The 5-year average for natural gas, we saw a 51 BCF draw. Again, that's the 5-year average. Last year, just so you can kind of get a clue, last year we had a 14 BCF draw. So again, storage a little bit lower than last year. And again, we also saw this move to the downside associated in natural gas over the last week or so due to a weather forecast expecting a little bit warmer temperatures. So that's kind of been holding prices lower as well. So we can kind of continue to see this range-bound type of market to the lower chop side here, again, due to that weather forecast. Real quickly, just talking about our RBOB and heating oil as well, just to sum up the energy complex here for you. RBOB trading in a decent range as well today to the downside. Our high of RBOB was $2.6258 and our low was $2.5893. Again, as you can see, just a little bit of a downward type conviction trade here. As now we just kind of settled the day, just chopping it up just a bit, getting prepared for open tomorrow. Again, we saw the same exact thing. We're talking multiple market diversions across the board here for RBOB, heating oil, and crude. They all do trade in the same pit, so the markets do follow each other to a T. So we all use the RBOB and heating oil as our leading indicator as we watch crude follow suit. Again, heating oil diesel fuel contract, $2.9768 on the high end of our trade, and our low end was $2.9363 on the low end of our trade. So again, watching somewhat of a significant offer coming to the market. Again, those options positions and the outright positions that I just mentioned earlier in the big trades in the pit, they were all traded about 1,000 times or so. So again, getting some downside activity, creating somewhat of a synthetic bid at the 85.5 level, and we can kind of really just see us trade within that range that we've been in for the last 2 weeks on the crude, really until really we get a deal out of Washington, or we get some type of some conviction here with volatility. But for the most part, again, just watching these trade here associated with dollar also rising as well. We kind of had a risk-on type of scenario here. We did have dollar rise about 500 points to the upside. Last close on the dollar was 80.26 even. And again, the euro was trading significantly lower, holding an offer below the 130 area. 130 handle, we trade 129.68, and again we also saw gold rally about $6 or so as well. So again, equities also catching a little bit of a bid. So we did kind of see that risk-on type scenario that we like to watch, and we're going to definitely keep our eyes on for tomorrow's big jobs data number that's coming out. And we also want to keep our eye on just the last couple days of our jet fuel buying and heating oil buying, talking jet fuel, diesel fuel, heating oil, crude oil from the airliners and also from the cruise liners. So we're definitely going to keep a good eye on all that. So that's really it. We'll see you tomorrow, 8:50 in the morning. This is Marty from Crude Squawk, reporting from the Energy Pits.